All right. As people are connecting, I will offer greetings. It's Mark Yusko from Chapel Hill. And, I really thought in May that I was done with the tariff presentation, but as the title here says, the never-ending story, are the Trump tariffs terminated? They just won't die. And so on the left, we have the roller coaster ride with Trump and Xi, and then Jerome hanging on for dear life at the end. And then on the right, Taco Tuesdays, and we'll explain what taco is. It's a new name for the trade wars or lack thereof. So I'm going to go through a lot really fast and spend a lot of time at the end. But if you stop to think about it, you have to admit that all the stories in the world consist essentially of 26 letters. Well, in the English language. The letters are always the same, only the arrangement varies. From letters, words are formed from word sentences, from sentences chapters, and from chapter stories. It's kind of interesting. It's kind of like A, T, C, and G. All of life comes from four symbols. When it comes to controlling human beings, there's no better instrument than lies, because you see, humans live by beliefs, and beliefs can be manipulated. The power to manipulate beliefs is the only thing that matters. Now it's getting a little scary. So from the never-ending story, who knows what they'll make of you? Maybe you'll help persuade people to buy things they don't need, or hate things they know nothing about, or hold beliefs that make them easy to handle, or doubt the truths that might save them. What I've started, I must finish. I've gone too far to turn back. Regardless of what may happen, I have to go forward. No, you can actually stop. Strange as it may seem, horror loses its power to frighten when repeated too often. Kind of like lies, but we'll get there. All right, how it started. So in every story, there are four elements. There's the first one, the setup. So we went to, in February, Trump, tariffs everywhere. Did anyone stop to think? And, we talked about the rhyme of the ancient mariner and that Trump thought the trade wars were easy to win and they were good. Everybody else, on the other hand, said it's not so good. Tariffs are a tax. The fact that most people don't understand that is kind of crazy. So if you lie to people, they will believe you. No, they are a tax, and they're paid not by the exporting country, but by the consumer of the good. There are winners and losers. They're anti-free market. Look, they basically disappeared in the United States before or leading up to the 1930s debacle with Smoot and Hawley. We just had Ferris Bueller Day last week. So, it was good to celebrate that. Tariff Man showed up in 2016. In 2016 and then 2018. He's like, look, I can reshore American jobs. I can reduce the Chinese trade surplus, neither of which he was able to achieve. It's silly because the bottom line is when you import stuff and you send dollars abroad, you have to buy more goods. Tariffs don't fix that. It's like, we've talked about it. You buy other stuff from the grocery store buys nothing from you. That doesn't make it a bad relationship. It's just the way it is. Free trade is good. Tariff Man is back. He wants 1930s style tariffs. The problem is no amount of tariffs will reverse the trade deficit. The media gets it wrong. They say it's going to hit China where it hurts. No, they don't understand that China has diversified their trade and we're only 8%. All tariffs do is usher in globalization. Globalization is bad for markets. So the second phase of every story is the response. So how it escalated, tariffs everywhere, investment environment starting to stink. We had this quote from Ronald Reagan, basically saying that, yeah, tariffs sound good, particularly to people in unions and other things where you can protect jobs. But the problem is you don't see the millions of jobs that you destroy by not having better economies and better trade. So even in 1987, he knew that it was bad, but that doesn't matter. Trump doubled down on the rhetoric saying, hey, I'll just have a full-on trade war. Who cares? So we talked about in the surprises, what was the number one worry? A global trade war. So in the surprises we talked about, the first would be that the recession finally shows up. Everyone was talking about a recession back in March. The numbers for Q1 were looking pretty ugly, and the math wasn't mathing for the Fed saying, "Oh no, we're going to have 1.7% GDP growth." No, we're not with 1.8% negative, but okay. The surprise would be that the Fed has to print. Jay Powell was back in dove mode. He was cutting, or at least that's what people thought, but then he has stubbornly refused, although M2 is back to growth. The balance sheet is 100% set to stop shrinking. So yeah, printer is coming. The surprise would be that the bear market gets out of ICU. Look, portfolio managers were not buying any protection. That meant that it was probably a good time to have some protection. March was a pretty ugly month. Beware the Ides of March. Tariffs create uncertainty, but what we said was that uncertainty had peaked. And when it peaks, that's usually a buy signal. And when the VIX goes way, way up into the red zone, that's actually a buy signal. So MAG stands for must acknowledge gravity, not magnificent. And look, they lost 3.3 trillion by March. Mag 7 valuations, even though they were 2-year lows, they were still pretty high relative to the S&P. We thought the dollar would shrivel back to Bruce Banner, and indeed it did. No new higher plateaus. Oil prices, Saudi needs them to rise. All they had to do was shut off supply. They refused to do it. Trump threatened them, and they politely declined, and they did increase supply. The problem is demand fell. So oil prices collapsed. The red woman, Ms. Lagarde, decided that she was going to outcut everybody, and she started cutting rates. And bam, I mean, European stocks had been dead money, and they went totally parabolic. No one had that on their bingo card that they would be the best. And the thing that really didn't make sense was, despite all the bad loans and all the over leverage, the European banks just took off. I mean, they have been totally en fuego. Ueda-san came in and reversed all of the efforts of Abe-san, God rest his soul, and it's been ugly. So he basically threatened to let the yen rise, even though they know that they have no way out except to let the yen fall. And where the head goes, the body follows, as my wrestling coach used to say. So the yen went up and stocks went down. So the dragon and the wolf, the surprise would be that the tariffs don't impact China. The Shanghai index goes up. No one wins in a trade war, but China loses the least. We are the biggest loser, and that's not something we would aspire to. Chinese equities bounced super sharply, still super cheap. The terrific 10 beating the Mag 7, yet no one, and I do mean no one, 4% of people are actually long Chinese techs. Well, not no one. I mean, David Tepper is long. Breaker of chains, we thought that despite everyone saying that Bitcoin would only go up, we thought it would go up this year. It would peak sometime in Q3, Q4, but then we'd have crypto winter. Right on schedule. We did get the pre-tax day correction, but it didn't go all the way down to the trough. We said, look, money supply leads Bitcoin price, so that sometime by around now, sometime in the summer, Bitcoin prices would take off and go totally parabolic through kind of August, September, October. That's still to come. Bitcoin treasury strategies, there were 80 of them back then. Metaplanet 3350 had gone all the way to number 10, and they were crushing MicroStrategy on the far left, crushing the Mag 7. I mean, it really isn't close. One of the best assets on the planet, period. Gold was going to break right through 3,000. We thought that would take all year. It took a month. Gold went to $21 trillion. That's a $5 trillion increase. And Bitcoin's only 1.7 trillion. So we thought Bitcoin had a long way to go to get the monetary value, which is about 10 trillion. So investors finally rediscovered gold miners. They went totally parabolic. So the third part of every story is the attack, how it was going. Tariffs, tariffs everywhere. Will the economy sink? Had a quote from Adam Smith, the GOAT of economics, basically saying, like everybody who's intelligent about tariffs, tariffs are dumb. They've always been dumb. They sound good to people who control governments and pay lobbyists, but to everybody else, they've never been a good idea. Now, look, before 1913, they were used in the US because we didn't have income tax. Let's let that sink in. We didn't have income tax for most of the 249 years we've been a republic. And so you did have to have tariffs, but government was pretty small. Now we have huge income taxes and government's very big, and we have payroll tax and all kinds of other tax. We don't need tariffs. So tariffs basically create an elite class, the robber barons. That was a term coined back in the 30s. And if you look at Trump's plan and you look at where Trump's funding comes from, there's this interesting article written that it kind of sounds like bring back the robber barons. Forget make America great, make robber barons great. Those who don't study history are doomed to repeat it. We've had 3 attempts to use tariffs: 1828, ended in recession and depression; 1930, ended in depression; and 2025. Well, doesn't mean we'll have a depression. He actually is to do the tariffs. We'll get to that. He declared April 2nd Liberation Day. The economist said, no, Ruination Day. The market said, no, this is a bad idea. Market tanked. Last time we tried this back in 2018, China retaliated, and all the money that we quote unquote raised from tariffs basically went to bail out farmers. So look, she holds all the cards. Trump demanded he call. He said, not calling. Trump responds with tariff elevation to silly town. So what does she say? No cargo for you. I just won't send you anything. And, oh, by the way, no rare earth minerals, and you basically can't make anything without them, technologically wise, because they have a virtual monopoly. So WTO does what you should do. They slash global growth forecast, and expectations of growth fall to 30-year lows, saying the S&P could slide 40%. Now, last time someone tried tariffs, it was a disaster for their party, as big a blue wave as we have ever seen ever. So when you look at the surprises, recession, basically we were kind of in a recession. The NBER hasn't called it. BlackRock said in April we're in a recession. Printer is coming. Well, ECB has been cutting. The president tried to chide Jerome too late Powell into cutting. It didn't work. M2 growth is growing, but it's not growing as fast as the rest of the world. And markets kind of went in a bear market, depending on who you look at and who you talk to, how you define it. And earnings estimates literally fell off the proverbial cliff. So must acknowledge gravity. We went from 3 trillion down to 10 trillion. Now, it did rally 4 trillion on the first of the on again, off again tariff pauses, which we'll get to taco here in a second. So NVIDIA priced for perfection, then they had their DeepSeek moment, and then it was starting to look just like 2001, pretty ugly. The dollar was shriveling. I mean, forget the Hulk. It was Bruce Banner and headed for the 98-pound weakling. It had given back all of the 2024 gains, on the verge of a negative return for a decade. The Economist went from saying it's the envy of the world to, oh God, a crisis. I love the media. A gentle reminder. We've been a republic 249 years. 80% of all the dollars ever created in the last 5 years. That's why a dollar now buys about 2.5 cents of value compared to 1913. House of Black and White. Oil prices, they couldn't catch a break. Liberation Day, global trade, everything was going against oil. Oil investors, though, panicked and they sold oil stocks to levels that we said looked like kind of a double bottom and maybe an interesting buy. And we liked MLPs because they just print money. Ms. Lagarde, she just kept cutting rates, set the printer to maximum burr. And even though they got whacked, European equities got whacked on Liberation Day with everybody else, they surged faster. And even the auto stocks went up, which is crazy. And no one, and I do repeat, no one had, peripheral Europe as the leading markets of 2025. So Japanese equities, Ueda-san just kept his thumb on the scale. He's reversing Abenomics, and it was just a, pardon my French, shit show in Japan. So in China, markets continued to fly. Now, look, they went down with everything on Liberation Day, but they bounced harder. Why? Because President Xi embraced tech CEOs while we threatened to delist Chinese tech. Look, we have a US-centric view of the world. China doesn't. China only has 8% of their exports to us. So they care a little, but they don't really care a lot. And Donald thinks he holds the cards, but the president understands that the cards are made in China. And she actually is holding a much better hand. So Bitcoin, everybody thought that we'd fall in March, April, which we did, and that then we would fly to 150 by September, October. There's seasonality. Q3 tends to be a really, Q3 and even into Q4 tend to be really strong periods in the market. And as I said, August looked like the blast off date. Gold went totally parabolic all the way to 3,500. And gold, okay, fine, it's done well for a year. No, how about 25 years? You ask the average person if gold has outperformed stocks for 25 years, they'd say you're smoking crack. But that's exactly what happened. The gold miners made a perfect, and I mean perfect, cup and handle, U-shaped pattern, lots of upside headroom to get back 2011 peaks. All right, so how it ended, the resolution, the fourth part of every story is the resolution. So tariffs everywhere. At this point, we could all use a drink. I was tired of talking about tariffs. And look, President Xi says it best. There are no winners. Bullying and hegemonism only lead to self-isolation. And the editor of the Global Times, that's a huge victory for China's commitment to the principles of equality and mutual respect. They are setting themselves up to be the preferred partner of choice. Now, according to the Donald, all we needed was some good old-fashioned backroom weekend deal making. Now, it's funny how they're always announced on Sunday when the markets are closed, but there was unusual activity on Friday. I'm going to say probably by people owned by Trump, but who knows? Not the first time that GJT told people that equity news was coming. He at least does tell you in advance. He calls his shots. So April Fools, no trade war here. Made a big, beautiful deal like a rocket. Stocks came all the way back. VIX disappeared. U.S. and China agreed to a 90-day rollback. Okay, but they're still really high levels. And if you actually try to send a parcel from China, it's a super high number. So yeah, it wasn't going to be implemented for 90 days, but it's kind of lies, damn lies, and statistics. So it wasn't really great. So lots of celebrating for lowering. Remember, tell people lie often enough, people will believe it's the truth. Back to Liberation Day levels. So I'm not quite sure, but the truce doesn't put us at total embargo, like total freeze of trade, but it does still constitute a tax of about 50+% that Americans are going to pay, not the Chinese. So despite winning, the tariffs are back to 1930 Smoot-Hawley level. that would not be a good thing. And the real question is the big damage already done to supply chains. So we're going to find out this summer. So surprise one, look, JP Morgan said, all right, fine. Yeah, no more recession. The average American would beg to differ. They're the least optimistic on the future they've ever been. And if you're in the lower class, it is literally the least confident they've been in, the most severe financial distress they've ever been in. So, well, hold on. The whole idea of the trade war was to lower rates, but Treasury rates were actually going up. So the Fed wasn't cutting rates. Well, the real problem is this wall of debt, which we'll talk about more in a minute. Everyone else, Japan, Europe, China, was printing literally parabolically. So at some point, Powell's going to have to follow on. The bear got out of ICU for literally one day. And then all the fiscal and monetary juice caused hedge fund managers to cover their shorts, although they're still pretty short, but they had to cover. And institutions were the most bearish. No one was actually buying any protection. So who's buying? Well, you guessed it, retail. So Mag 7 became Lag 7. So it's lagging the rest of the market and especially lagging MicroStrategy. But all fixed. Everything's fine and everything's back to where it was before Liberation Day. So it was all just a bad dream. Bruce Banner, I mean, he would be envious of how everyone was piling on the short dollar trade. And for a short period of time, everyone was caught off sides. The dollar did rally for a couple weeks. We'll come back to that. Oil prices, they actually went up for a little bit. So that was good. You know, Saudi got through it and our call on oil stocks looked really good. European stocks just kept chugging. I mean, it is unbelievable. Japanese equities, it's just bad. Ueda-san is just not messing around. And now, interestingly, he did a flip-flop on the yen. So he let the yen devalue on the left, and you had 2 weeks, a record 2 weeks. It had never gone up straight every day for 2 weeks in history. That was kind of interesting. So all it took was a flip-flop. U.S. prints dollars, we send them to Asia to buy stuff. They bought bonds. But they took the money and invested in innovation. Now they dominate every global technology there is. And despite the trade war volatility, Chinese stocks up way more. Bitcoin back to double-digit gains, 98% of wallets in profit. The cycle was predicting somewhere around 200K by the end of the year. Bitcoin treasury companies up to 100 now. The newest one being this Nakamoto company, the Dave Bailey, and full disclosure, I'm involved. Golden Crown, look, people buy what they wish they would have bought just in time for gold to go down, which is usually the way it works. Long gold became the most crowded trade. All right, so the epilogue, how it went. So that brings us to today. So what is Taco Tuesdays and what is all this stuff? Well, as we've discussed since February, tariffs reduce growth and prosperity. On the left-hand side, if you look at the average tariff rates around the world, you would not look and say, high tariffs lead to super high growth and prosperity. You would say the opposite. And on the right-hand side, we're on track for the actual weakest decade of growth since the 1960s. That's bad. That's not good. So in typical Trump fashion, he's now threatening take it or leave it. So we're going to make ultimatums to everybody over the, so this July 8th deadline, we don't even need that because people are just going to have to take our deals. I don't know how that's going to play out. So what does TACO actually stand for? The TACO trade is an acronym that was created a couple months ago for Trump always chickens out. Simply put, it's been demonstrated numerous times that whenever the stock market dips, he just backs away. He either extends or he says, oh, maybe I'll, exempt certain people. And the problem is he just continues to look very weak. Now, maybe we shouldn't make fun of a seated president. I mean, I didn't make the picture, but the bottom line is that Trump always chickens out is the new tariff mantra. And it's taco because tariffs would be the largest tax increase in decades. I actually can say it would be the largest tax increase this century. That would be a big issue. That's not what people voted for. Small businesses are saying it is the number one problem. So what are they doing? They're passing through all of the increase to customers. So it is a tax increase, no matter what you say, right? You can't make a story that's different from the reality. So fake news. So Donald reported on Truth Social. I love Truth Social. Is that an oxymoron? That our deal with China is done, subject to final approval with President Xi and me. And he goes through some details. And, according to the China readout, President Xi and I are going to work closely together to open up China to American trade. This would be a great win for both countries. Okay. So on the right-hand side, if the 55% tariff claim is inaccurate, so that someone asked Grok, the 55% tariff claim is inaccurate. The U.S.-China tariff deal sets tariffs at 10% for both countries for 90 days, per the White House statement. The 55% figure likely stems from speculation of past proposals. So there is actually no agreement by anyone that there's going to be 55% tariffs. Now, the press secretary said what the president heard he liked. China's agreed to open their markets to the United States separately of the deal. Okay, but that doesn't mean they've agreed to 55% tariffs, which is what Trump reported. Now, Basson was quoted saying negotiations with China will be a much longer process. Asked if China will be a reliable trade partner, we will see. Lutnick said there's no text on the deal, just an agreement after China's president approves. So there's no deal. So how do you keep saying there's a deal if there's no deal? I don't know. And if you read the fine print, things get even a little murkier, more murky. Plenty of work left to do. So China's 6-month ease on rare earths. So basically they said, all right, you put a pause for 90 days. All right, we won't cut off all your rare earths for 60 days. I'm sorry, for 6 months. And then we can negotiate. So basically this says that we're going to negotiate, not that there's a deal. So I guess expectations are really low and all we have to do is beat 55% and that'll be a win. I don't know. Sounds weird. So China export activity actually shows no signs of increase. This could get super ugly as the summer drags on, when things start to run out. Markets, they really didn't like it. So this is yesterday. Now, China stocks went down less than U.S. and tech went down less, but U.S. went down. And it's, would you like a side of lies with your taco? So the world is basically calling the bluff. So Trump levies an additional 30% tariff on top of the 25% tariff already in place for a total of 55%. Market loves to be lied to. So why would 55% tariffs be bullish? Are they a negotiating tactic? But the taco Trump announces the trade deal, but there's no trade deal. So again, probably extreme to call the president a total liar, but he's saying he has a deal when he doesn't. So all that said, we do have to acknowledge that the markets are back to Liberation Day levels. Okay, so that is a good thing. And that's why the markets are calling taco. They're basically saying that Trump's going to chicken out and therefore there won't be any tariffs, therefore everything's back. Now, the real issue for all of us as investors is now we're back to extreme valuation levels. I mean, danger zone. On the right-hand side, the U.S. is now in the top 5% of top 10% of the most expensive it's ever been. And you got companies trading at 30, 40, 50, 90 times earnings. And those are forward earnings. 36 times forward earnings is not cheap on any measure. So then today we got even worse news. So the ultimate terminator of tariff trade wars is an actual hot war, like World War III. So news this morning, Israel considering a military strike on Iran, U.S. bracing for an Israeli strike on Iran. We're evacuating people in Kuwait and Middle East. I don't know about anybody else, but this is a bad thing, you know? So markets don't like the no deal, no problem. Just rattle a few sabers. Markets love war. So markets are actually up on threat of war. I go figure. All right. Recession. Polymarket says recession odds are collapsing. Jamie Dimon says, no. I think we're going to see numbers deteriorate and we're in for a recession in the second half. I mean, Jamie's pretty close to some smart people. And he's not an economist per se, but he's smart. ISM services index falls into recession territory, and the new order segment is even worse. Okay, that's bad. Job market. Now this is the crazy part. So the job market has been deteriorating all year. Every month, job numbers have been down. But it's worse than that because it turns out that last year, jobs were overstated by 900,000. So more than half of the jobs weren't actually created. M&A activity literally off a cliff, like worse than both of the last two recessions. And the leading economic indicators are collapsing at a level we've only seen one other time, global financial crisis. That's bad. Now, everyone is crowing about inflation coming in at 2.4. Now, a reminder, that's still above the 2% target by a meaningful amount. And the super core is actually hooking back up, but let's just ignore all that. So printer is coming. The vice president basically accuses Powell of monetary malpractice. And Donald jumped on the bandwagon yesterday saying, great numbers in the CPI. He needs to cut by 1%. Very important. So important. Bank mouthpiece, so Governor Rhee said excessive rate cuts and stimulus could lead to price upswing in property markets, increase FX volatility. We will carefully decide the extent and timing of further rate cuts. Basically saying no cuts for you. All right. The betting markets and the Fed futures, both say, no, you're going to cut twice. Okay. After the Iran news this morning, June rate cut probability fell to 0. And actually, it's non-zero for a rate hike, despite everybody still thinks we're going to get 2. We'll see. Despite all the rhetoric, M2 is at a new all-time high. So we have more money now than we've ever had in human history, or American history. I guess it'd be human history too. While growth rate is below the golden rate. So we need the golden rate of 6.5% in order to have the kind of GDP growth that we become accustomed to service our debt. At 4.4, we're just not quite there. So we need a little more. Why is the Fed sweating? Well, because the debt is out of control. So much for drain the swamp, so much for balanced budgets, Remember, there was a time Trump said that no one should be allowed to be president if they couldn't balance the budget. Debt issue is out of control and the interest burden is worse. We are about double any other developed market in terms of net interest to GDP. Let's let that one sink in for a second. So you got all these other countries that we think of as banana republics, and our interest payments relative to GDP are 2 to 4 times worse. Not a good thing. Now, the whole world is dependent on expanding money supply. We don't generate enough growth because of the amount of debt we have and the amount of debt service. So there's a negative multiplier effect. So you don't want to necessarily bet against what's going to happen, because if you look at China money supply, it's been rising dramatically. That means some of it's going to end up in Mag 7. And global M2 and Bitcoin are highly correlated. That means Bitcoin prices are likely headed higher. So what about the bear market? Look, bear was out for one day. Investors love tacos. Okay, this has been a truly historic market rally. We've never seen anything like this, actually. 41 days. And the question is, quo vadis, right? Can this continue? Can we, again, you look on the right-hand lower right, you don't see this type of growth for long periods of time, right? It's spiky. You spike up or you spike down. So it's probably unlikely we're going to continue, but who knows? So then there's the reflexivity question. Are valuations high? Should be an S. Are valuations high because pensions are all in? And there should be an I. Wow. 2 typos in one slide. Or are we all in because prices are up? So is it the chicken or the egg? One thing we know for sure, the last couple times that pensions had been all in, it didn't end well. So must acknowledge gravity. Look, the DJT put has kicked in, short squeeze masterclass. Elon was there coaching. Hedge funds piled back into Mag 7 in May, but who could blame them? Look at these returns since 2020. They're beautiful. Now, one thing that is happening that's not getting a lot of press time, but buybacks are now at the highest rate we've ever seen. And the funny thing is they're actually buying the stock from the insiders. And one of my favorite sayings is insiders don't sell at bottoms. So that's something we should pay attention to. All right. The dollar, look, the dollar is expensive on every measure and is likely headed for a resumption of its long-term trend downward. Trump trade war 1.0, dollar actually strengthened. Okay. 2.0, not going so well. And we're at the lowest point in 3 years. And in fact, we now are negative for 10 years. Oil surging. Now, part of that surge is because they're threatening to bomb Iran. So that certainly was part of it. But the tariff pause triggered a rally. And if we break through that 200-day moving average, there's a lot of upside. So all you needed was a flip-flop to get a 30% surge in oil stocks. And we are on the brink of a pretty big breakout. And MLP's back to double-digit gains for the year, about 8% in yield and 6% in capital gains. Europe, there are just no words for how fantastic European equities have been this year, which, again, very few people were talking about. And the banks on the right-hand side, they haven't, they've come, their rate of ascension has come down, but it's still, they're up, close to 40+%, which is crazy. Again, most people didn't have emerging markets and peripheral Europe as their 2025 best performing markets, but that's indeed, I mean, Europe has outperformed emerging markets, which has dramatically outperformed the US on the right-hand side. Japanese equities, look, you needed the yen to flip, and the yen is kind of weakening again, although the downtrend is still troubling. And so you've seen Japanese equities kind of sawtooth here. So we're in no man's land. And if they strengthen the yen, I think Japanese equities are ugly. If they let the yen weaken, all good. Despite the volatility, Chinese stocks up way more than the US, like 2 or 3 times US stocks this year. Bitcoin, look, Michael Saylor had a very important message for investors at Vegas, Bitcoin 2025. Wealth favors those who embrace intelligent monetary risk. We've talked about this before, right? You should only take risks you get compensated for. Courage, or the ability to act when others are afraid, is what makes great investors. And I like Michael's 21 truths about Bitcoin. What it is, it's a protocol, it's an ideology, it's an asset, it's a network, it's ethical, it's a commodity, it's a digital commodity, it's digital scarcity, digital gold, digital money, perfect money. And as you go down the list, you're like, it really is a better form of value storage and value transfer. Adoption is following the same S-curve as the internet. We've got about 3% adoption, which is the equivalent of investing in online banking in 96, social media in 05, or the internet in 90. Those all worked out pretty nicely. How big is it? 2 trillion sounds really big, and it's similar in size to some of the big Mag 7 companies like Alphabet. But when you look at it relative to a quadrillion, 1,000 trillion dollars worth of assets in the world, it's still going to gobble up a lot. And could this whole thing on the right turn orange? Yeah, most of it. I mean, it is a better store of value, for example, than real estate. And much of real estate and bonds can get subsumed by it. Bitcoin back to a double-digit gain. It's been over 100K for 30 straight days. Never done that before. Very highly correlated with global M2 growth. So interesting thing happening recently. So whales, so people who own more than a certain amount of Bitcoin, are buying like we've never seen before, despite the fact that we're near all-time highs. That's a really interesting dynamic. And that goes to, Julian Robertson's famous line, losers average losers and winners press winners. You double up, you never double down. Now, the Bitcoin power law curve says Bitcoin peaks late this year, October, November, around 200K. Could go a little higher, could go a little lower, but the dark blue line. And the red line is following pretty darn closely to, and it says we're going to take off here sometime in the next 30 days, 60 days. The halving cycle theory says 180, also in late 2025. Interesting that 2 different models come up with the same rough numbers. Now, there are some arguing that retail FOMO cycle is being replaced by institutional demand. This is somewhat compelling, right? If you look at Google searches, no one is talking about this. There's no retail FOMO. This is real people buying. And one of the things is it's real companies buying. We're well over 100 global firms now. And some of these companies own lots of Bitcoin. And there's new ones announced every single day that are actually raising money to buy more Bitcoin. So this institutional demand could truncated. This is where I could be wrong on my belief that the 4-year cycle is going to persist. It's possible, I'm not saying likely, but possible that this kind of trumps it. Top Bitcoin treasury company, top dog is MicroStrategy. It's dramatically outperforming TradFi over all periods. The 1-year period is the most, one of the most significant, up way more than Tesla, more than Bitcoin, up more than Meta, because it's leveraged Bitcoin. Saylor created a really interesting full spectrum torque machine. So he's got his stock, MSTR, and then he's got preferred stocks and convertible bonds in the form of Strike and Strife, and they work together in a way of allowing you to leverage your ownership of your core asset, which is Bitcoin. So one of the things that he talked about in Vegas was, imagine buying my convertible bonds or my preferreds where I pay you 8 and 10% or 10 and 8% respectively, but those are fully backed by Bitcoin, not by some esoteric business or assets like fleets of trucks that you have to worry if they've got more miles on them than you thought. And if they're 6 times over collateralized, which they are, it's an interesting dynamic that if I have a bond that pays me 5% or private credit, which pays me 8%, or I could buy convertible bonds backed by Bitcoin that pay me 10%, how much of the bond market will he suck up? Oh, it's interesting. All right, Metaplanet is running the MicroStrategy playbook to perfection. Again, full disclosure, I'm a board member and owner. It is the best performing stock in Japan, and it's kind of crazy. It's actually 10 times better than the number 2, and it's dramatically outperformed MicroStrategy. That's just the law of small numbers. When you start from a smaller base, it's easier to outperform. It'll be harder for Metaplanet to outperform from here, but there'll be other things, smaller, Bitcoin treasury companies that do better. Gold, well over 3,000. We're in a consolidation period. We're going to break out or break down. Gold is either going to go up from here, probably closing in on 4,000, or we're headed back down to 2,500. I'm not going to make that call, but humans love to buy what they wish they would have bought. They're now setting a record for flows into gold, and they've even rediscovered miners. Miners up now almost 60%. I mean, that's just been a spectacular trade, dramatically outperformed just about everything. All right, so on podcast, we've got Around the World. So this will get posted on Around the World next. So the last one up is Tariffs Everywhere. At this point, we could all use a drink. Hedged with capital D. We're overdue for an episode, so Corey and I will get one out there soon. And the digital currents we record every week. X and I do, so we'll put another one on Friday. Our last one we talked about Upexi, which is a Solana treasury company similar to MicroStrategy, but really interesting listen. New book on the far right, The Big Print. Would be interesting for people. My friend Larry Lepard wrote it, and it's a great read. So with that, let's see if there are any questions. Looks like there's one. Any thoughts on Gemini listing? Okay, so Gemini did announce out in Vegas, the twins announced that they have filed a confidential S1. No timing per se announced on when the IPO would happen, but they've been in discussion with bankers for a while. They filed the S1, which means sometime likely this year. No discussions yet on valuation, but just given a sense of, you look at eToro. eToro was going to go out at somewhere between 3 and 4 billion. It's a portfolio company in our fund 1. And so I want to make sure I get the latest number. They came out at about 3.5, and they have rallied all the way up to 5.5. About 22% off the IPO price. So I guess they came out at 4 and they're at 5. Sorry. They were up a little more before they came down over the past few days. Block Demon IPO, in 25, doubtful, not impossible, but doubtful. I think they are still really focused on growth mode. Now, some things could change. These new rules on staking absolutely could accelerate the timeline. So don't hold me to that. And I'm not on the board there. And I don't attend the meetings. One of the other guys does, so I could check in with them. Any nuclear investments? We have not. I struggle with actually, that's not true. We did make one private investment in a nuclear company that was trying to do kind of, turbine size, micro turbine sized nuclear reactors, 40 kind of pound type. Maybe. I still think it's science fiction at this point. Stocks have gone up a lot. I mean, Oklo, I think, is one that I just makes no sense. $10 billion valuation for that. But the quantum stocks are similar. They have $10 billion valuations with very little to show for it. I think part of the challenge with where we are in the economic cycle and the market cycle is these story stocks, back to the never ending story, right? The story stocks really get rocking and rolling, and you certainly can't short them because then you get squeezed and these things go parabolic. I take the, MicroStrategy, one of the most heavily shorted companies in the US. Chanos is all over it. Metaplan, I think, is the most shorted company in Japan. And yet they just keep squeezing higher because people don't understand how, the Bitcoin treasury model works, because you can issue stock at a premium and buy Bitcoin and then you arbitrage the spread. A nuclear company that has a hope and a prayer, I don't know. Or a quantum company that has 100 qubits, but you need 1 million to even be functional. How long is that going to take? I think it's going to take a long time. So I think those are tough investments. Figure. Figure, the question is, Figure was going to IPO last year. Figure has wanted to IPO. I don't know that they were ever really in the queue to get out last year. Markets were not very hospitable. They have registered. They have filed an S1 as well. And I guess if I think back to it, maybe a year and a half ago, they were talking about maybe trying to get out in 24, but 24 was a tough year. There were basically no IPOs to speak of. Stripe didn't get out and Chime didn't get out and nobody got out. Some of these companies are finally starting to get out. We've seen a handful of IPOs. So I do think Figure will likely get out this year. They have filed. They've engaged lots of bankers. There seems to be a lot of demand for technology companies around digital assets and blockchain. So my guess is they will make it. But I don't really know the timing per se. All right, all good questions. All right, well, it looks like no more questions, so I'll give you back 5 minutes of your day and wish everybody a happy summer. And we'll be back, hopefully talking about a different topic soon. And enjoy the upcoming holiday in a month. Talk to you soon.